Everyone, so today I'm going to go through with you 10:15. This is of grade 12 inventory systems, and I just thought this is a good one to show you how a business can use two different types of inventory systems within the same business, just in two different departments. So I'm not going to go through all the information step by step with you. You can read it, but I just want to note how important it is that you read the question carefully and make sure you read all the information, because this note too is quite important when calculating further on. So just to note that this store has two departments. It has rugby jerseys and rugby balls. And the second note says carriage on purchases for the year amounted to 30,200 for the transporting of the rugby jerseys, and it is not included in the figures above. However, the carriage is included in the costs above for the rugby balls. So this is basically just saying that in the 750,500, this amount of 30,200 was not included, but this 901 includes the carriage. That's basically what they're trying to tell you here. But yes, let's get on to question 1. Okay, so question 1 asks you to calculate the following for the rugby jerseys. It's asking you to calculate the value of the closing stock, the cost of sales, and the gross profit. Note that they're asking you to calculate the closing stock using the weighted average method and to round to the nearest rand. Okay, so if we were to do this, we would take our first, this is in like 4 steps. So first we got to calculate the total rand value of the goods purchased for the year. We have to include our opening stock plus our purchases plus any carriage on it. So this is going to be our 216 that they gave us, those opening stock, plus the 750,500 as purchases for the year, plus the carriage of 30,200. This gives us a total purchases for the year of 996,700. Okay, now we're going to calculate the units, and that is just your opening stock plus your purchases. So that was also given to us as 1,200 units plus 3,400 units. That gives us a total unit of 4,600. So now to calculate your weighted average, you're going to take your total purchase cost or value of your stock, which is the 996,700 divided by the 4,600 units that you have, gives you an average cost of 217 Rand. This then, we're going to use the number of units at year end, which is given to us as closing stock 900. That is the total number of units physically counted in our store. So that's 900 times the 217 weighted average value, gives you a value of closing stock of 195,300 Rand. Okay, so secondly, they asked us to calculate the cost of sales. So cost of sales is just your opening stock plus purchases plus your carriage, but I forgot to include that here. So if you just put a little, add it into this equation, minus your closing stock, okay? So your opening stock plus purchases plus carriage was the 996,700, which you previously calculated here, minus the cost of, the value of your closing stock, which is 195,300, which was calculated here. You bring them both these figures down, and you get a total cost of sales of 801,400. Okay, secondly, they asked us to calculate the gross profits. Your gross profit is just your sales minus cost of sales. This is the 1680, which they gave us here, minus the 801,400, which you previously calculated, gives you a total gross profit of 878,600. Okay, so now question 2, they asked us to calculate the same as the above, but now for the rugby balls, and now using the Fifo method. Okay, so firstly, we're going to calculate the value of the closing stock. So the value of the closing stock using now the Fifo method, they told us we have 500 units at the end of the year. Closing stock is 500 units. Knowing Fifo method, we're going to take whatever we have purchased last. So it's going to be 200 units at 225 Rand Sorry, that was out of focus. But it's going to be the 200 units at 225 Rand per unit. And then remainder of that is 300 units. So it's going to be the 500 minus the 200. Now it gives us 300. So we know we need to take 300 units out of this 2,800. The second to last purchase we made. So it's going to be 300 units at 190 Rand per unit. You can see this here. Is going to give us a total value of closing stock at 102,000 Rand. Okay. Secondly, they asked us to calculate the cost of sales. Cost of sales is again your opening stock given to us, plus your purchases, plus again your carriages if there is any, but they told us that the carriage was included in this, minus your value of your closing stock. So this is the 249,600. I made a mistake there. This should be a 6, plus 901,000 as your purchases for the year, minus your closing stock, which is 102, which we calculated previously. That just gets brought down straight. Gives you a total cost of sales of 1,048,600. Okay. Thirdly, they asked us to calculate the gross profit. Gross profit is your sales minus your cost of sales. So your sales figure they gave to you here, and your cost of sales you previously calculated here. So you just bring that straight down, gives you a total gross profit of 613,400. Okay, now in question 3, they ask us which department is contributing the most to the profitability of the business. Show appropriate calculations to support your answer. Okay, with this, you can't just tell me that the sales on the rugby jerseys is the same, is higher than the sales on the rugby balls, because it's not going to be enough. So you need to show with another calculation how we can compare the two departments, the rugby jerseys and the rugby balls. So with that, we're going to compare the markup percentage. Okay, so if we were to compare the markup percentage of the jerseys, we're going to take the gross profit divided by the cost of sales, which we had previously calculated. We got the gross profit figure of 878,600 divided by the cost of sales is the 801,400. Times by 100 to get a percentage gives you 109.6%. This is a really great markup, and most businesses should try and achieve a markup like this. And then if we need to compare the one we just calculated to something else, so we're going to do the same thing, but now for the second department, which is the rugby balls department. Again, we're going to take the gross profit divided by the cost of sales times 100, and that's going to give us a markup percentage. So you use the figures we previously calculated, the gross profit of 613,400 and the cost of sales of 1,048,600. It's going to give us a markup percentage of 58.5%. You can see that there's a huge difference between the two markups, and when they're asking you to determine which one's better, you need to compare and you need to justify why you're choosing one over the other. So basically, jerseys have a higher markup percentage, thus they're more profitable to the business. They also have a higher sales and higher gross profit. Okay, let's move on. Okay, so now if we look at question 4, they're asking us how effectively have Banyana stores controlled their stock during the financial year, and make necessary calculations to support your answer. When you see control of stock, you need to automatically think, have things been stolen? Have things been damaged? Okay, that's a trigger that should, when you see the words control, you just need to think straight away, theft, stolen, damage, etc. Okay, so now we need to calculate if any stock has gone missing. And to do this, we take the 1,200, we need to compare again to see how each department's doing. So we're going to take the 1,200 units, which was the opening stock value, plus the 3,400 units, which is the purchases during the year, minus the 3,500, which is the sold. Okay, so we're basically taking what we purchased into the business minus what we sold to tell us what we should actually have in our store in terms of the book recommendations, essentially. So if we did this, we should have 1,100 units on hand. That's what we should have. But they told us that we actually physically, they counted only 900 units. So the difference in these two is the difference in the 1,100 and the 900 is the stock that has gone missing. So that leaves us with 200 jerseys missing. Okay, now if we did the same thing with the balls department, it's going to be the opening stock of 1,040 units plus purchases of 5,000 units minus the units sold, which is 5,540, gives you what we should actually have, which is 500. And then they did a physical stock take at the end of the year and they calculated 500 units. So that shows us that 0 is missing. So in this balls department, there's great control over stock. Whereas the jersey department, it's shocking to say the least. They need to put better internal control measures in place. Okay, and then the other two are just theories. There's no calculations there. But if you want me to explain this, let me know. Comment about it, message me about it. Let me know if you want me to go through theory. Stay tuned for the next video.